A lot of people have already seen that there's a country that's the #1 economy in the world, and it has so much debt, it's practically reaching Mars. So in this video, I'm calling to tell everyone, I'm going to explain that this massive sky-high debt of the United States, we really don't need to worry about it. We don't need to stress. We don't need to be like, oh no, is this bad? What's going on? I'm here to tell you all about this pile of debt in the United States. It's not really a problem for them. And the dollar isn't going to collapse. Here's why. Thank you so much to everyone for following Sign Money Monster. And thank you to everyone who has always supported the Sun Money Monster channel and our team. All the support you've given has allowed me to buy more information, get better access to data, and share it with the team so everyone is more motivated to work. This way, we can create even higher quality content, develop our content even further, and bring you great knowledge to share. And it really encourages me to write even spicier, sharper content, line by line, just the way you like it. Really, I want to keep sharing all the juicy details with you, just like always. And if anyone wants to support us, you can do so right here. Just scan this QR code. Or even just liking, sharing, or subscribing means so much to me. It really keeps me going. Thank you so much. Now, let's get started. In this video, I'm going to talk about how even though the United States is seeing signs that the economy is slowing down, and there are real concerns about how messy things could get, people keep talking about a recession, wondering why it hasn't happened yet. Why is that? What's really going on? So, does the United States have some kind of magic trick or secret? How are they able to keep their country going so strong like this? Before we get into why the US seems to have so much going for it and why they don't seem to have any problems and why the US dollar isn't collapsing, let me first update you on the economic warning signs in the US. I'll tell you just how serious and widespread the economic issues are. Let's start here. The Congressional Budget Office is predicting that this year, the US budget will be in deficit by as much as $1.9 trillion. This is an even higher estimate than before, up by $400 billion. Wow, with the forecast increasing this much, I can't help but wonder, where are they going to spend all that money? The term budget deficit is pretty straightforward. It's like when you sell something but end up losing money, or when you earn income but your expenses are even higher. But this isn't just on a personal level, this is on a national scale, and we're talking about the United States here. So I went to look at the chart of the US government budget. Turns out it's been in the red nonstop since 2002. The US budget has never been in positive territory. And what's even crazier is that the US also sells things, right? Every country has to do business, and the US does business with the rest of the world too. But it turns out that the US trade balance has been negative since 1980. It's been dropping sharply and continuously. Not only that, but it keeps going deeper and deeper into the negative. Just imagine a dance move, like the freeze frame from Nong Chiquita and Money Monster, symbolizing the US economy's downturn. Is there more? Yes, there's more. Most recently, the US service sector's orders have plummeted. They've dropped fast, dropped hard. This is the sharpest drop in the past 4 years. I'm talking about the ISM index, which reflects new orders coming in. If you look at this graph, you'll see that the US service sector's ISM is only at 48.8. That's below 50, and anything below 50 is not good. That means new orders or new purchase orders for the US service sector have dropped. They've fallen fast and hard. This is the biggest drop in the past 4 years. So demand in the US is going down. How bad is that? Well, when we talk about the service sector, the US is a country that relies on services for 70% of its economy. That's normal for them. In developed countries, their economies tend to lean more towards services. Now, moving on to the business sector, if you look at the business sector, it's also gone down. It's dropped to 47.3, which is below 50 again. See? That means demand, or domestic purchasing demand in the US, is also declining. Basically, inflation is high, goods are expensive, so expensive that consumers just don't have the purchasing power anymore because wages Wages just can't keep up. Or you could say it's a situation we call consumers running out of money. Inflation is so high and things are so expensive that people just don't have money left to buy anything. That's why demand or purchasing power is dropping. And that's why the graph looks the way it does. Are there any other signs of a weak US economy? Oh, this one's a classic. It's been reported since last year. The US interest rate has been rising rapidly and sharply, and it stayed high like that, just not coming down. They keep saying it'll go down, but it never does. But it never actually goes down, right? So that's why US government bond yields keep rising. Bond yield is basically the interest rate on those bonds, and it keeps going up. That means the price of newly issued bonds goes up, while the price of older bonds drops, right? But there are a lot of companies, especially banks in the US, that have invested heavily in US government bonds. So as time goes by and interest rates rise, the value of those bonds, the bonds that these banks or companies bought before, have dropped in value. A lot, actually. This has led to a phenomenon where the asset, which is the government bond, has fallen in price. This could even trigger a bank run. Here's how. The FDIC, or the Federal Deposit Insurance Corporation, reported that right now, the value of the bonds that US banks have invested in has decreased. This has caused a collective accounting loss among banks across the country, totaling as much as $517 billion. The term accounting loss here refers to an unrealized loss, meaning the value of the assets they hold has just gone down. Like if you buy a stock and its price drops, you have an accounting loss, right? But it doesn't become a real loss unless you actually sell it. If you sell, then it immediately becomes a realized loss. The situation that would cause banks actually have to sell these assets is when their prices keep dropping, and then the news spreads. Eventually, a group of people gets scared and doesn't want to keep their money in the bank anymore. They worry, like, hey, if the bank's assets have dropped this much, if I leave my money there, it might not be safe. I'd better withdraw it. Once one person withdraws, they tell others, and then more people start withdrawing. When this cycle of withdrawals keeps going, it creates a panic, a mass anxiety. That's when it can lead to everyone rushing to withdraw their money from the bank. Then the bank is forced to sell its assets, even if it means selling them at a loss. When that happens, the losses become real and painful, just like what happened with SVB, Silicon Valley Bank, when it collapsed last year. This is the risk that could trigger another wave of bank runs and collapses among banks in the United States. So, is there anything else? Any other signs of a bad economy in the US? If we were to skip over this topic, we'd be missing a classic issue, the public debt of the United States. Right now, if you look at the debt clock, it has already climbed to $34.8 trillion already. And honestly, that number is growing so fast. Why is this public debt such a big deal? Well, government debt is essentially just another form of the people's debt, too. It hurts the economy. To put it simply, let's just do some basic math. The US population is 336 million people, and the debt is $34.8 trillion. That means, on average, each person owes about $100,000, just rounding it off. That's roughly 3.5 million baht, give or take. But in reality, you can't just divide it up like that. It doesn't actually mean that you can't just take that public debt, $34.8 trillion, and divide it by 336 million people, because the people who are actually responsible for paying taxes are only those who are working and meeting the income threshold, right? Kids and the elderly mostly aren't included, and people without income aren't included either. So if you divide this debt among only the real taxpayers, there are only about 129 million out of 366 million people. That means so for each taxpayer, the people who actually have to pay taxes, the debt burden per person is $266,952. Or if you convert that to Thai baht, each taxpayer is carrying a debt of 9.3 million baht. The ratio of debt to GDP in the United States has also risen sharply. Back in the year 2000, the public debt to GDP ratio was only 7.69%. But by this year, the debt ratio has jumped to 122.27% of GDP. That means for every $100 Americans earn, they owe 122. Simply put, the debt has surpassed the country's ability to pay it back. That's just a rough overview for now. In reality, there are even more signs of economic trouble in the United States. Some minor, some even bigger than this. But if I were to tell you everything, the whole video would be over. But let's move on. Would you believe that even with all these negative economic signals, the United States still won't collapse? The US dollar won't collapse. Nothing will happen to it. That's because the US dollar is the most in-demand currency in the world. Even if the BRICS countries, China, Russia, Brazil, South Africa, and India, join forces to try to de-dollarize, right now, they still can't bring down the US dollar. Why is that? Just look at this chart. The world uses the US dollar for almost 60% of transactions. Okay, here it says 59%, right? Meanwhile, the second most in-demand currency in the world is the euro, which is used for only 20% globally. As for the Chinese yuan, which people say will replace the dollar, it's only used for 3% worldwide. How could it possibly compete? On top of that, central banks in many countries, in fact, the news says 73 countries, have said they're going to reduce their yuan reserves. That's because the yuan offers low interest rates, so they're moving their reserves to assets that offer higher returns, which probably means US government bonds that have much higher yields. And that's not all. The US dollar is also used in transactions for buying and selling goods around the world, making up as much as 88% of global trade. This is the overwhelming dominance of the US dollar on this planet, which is called the world. How did this happen? Let me give you a bit of historical background. Since 1971, when President Richard Nixon announced that the US dollar would no longer be backed by gold, from that point on, the world has used the US dollar as the currency to back other currencies. It also became the main medium for global trade and exchange. And instead of backing its currency with gold, the United States started backing its own currency with debt instead. That is, bonds, a wide variety of different bond types, and the debt that the United States issues to the world. More specifically and primarily, this refers to US government bonds. So the debt issued by the US actually has the unique global prestige to serve as a guarantee of wealth for each country. Right now, whichever country holds a large amount of US debt, what we call US government bonds, can be said to possess a very substantial amount of wealth. They suffer losses because, as of today, when the United States starts to show signs of trouble, when the economy isn't doing well and things start to go downhill, the value of bonds drops. And it's not just one person who gets hit, the whole world gets affected. Anyone holding US government bonds sees their value fall. The country hit the hardest is Japan because it holds a large amount of US government bonds. Over $1 trillion. Even countries that have been offloading US government bonds continuously since last year up until now, countries that used to hold over $1 trillion as well. Oh, I forgot to mention, that's China right now. Even though they've reduced their holdings a lot, they're still affected by the US dollar. Because no matter how much China sells off, they still hold more than $700 billion in US government bonds. Other countries hold them too. Thailand holds some as well. But if you ask, hey, why doesn't the United States go bankrupt? Why isn't their economy affected? The answer is that the US dollar is still in extremely high demand. Really, there's a huge global demand for the dollar. No matter how much they print, it doesn't cause inflation within the US because the dollars can be exported. There are always buyers. Just think about it. The US national debt clock is ticking up every split second. It's not just because the United States is exceptionally skilled at borrowing money. Being good at borrowing alone isn't enough. They must have a unique set of advantages going for them to be able to borrow this much. This is exactly why the US can print virtually unlimited amounts of money, because the dollar is in high demand globally. And why can the US borrow endlessly? Because the dollar is in high demand globally. Why can the United States hand out money without any problems? It's because the US dollar sells.
Front running? The United States essentially gets all the money because we have to print more money literally every time.
So no matter how incredibly bad the US economic indicators might get, and no matter how sky high their national debt continues to climb, I'm certainly not saying their economy won't face serious problems, but what I am saying is that the dollar itself simply won't collapse. Why is that? Let's all answer this one together. It is because the dollar still sells. As you can see, if it weren't for debt, it's hard to say what the US would use to keep things running in the country right now. Like back at around June last year, when they were about to hit the debt ceiling and couldn't raise it, right? Janet Yellen, the US Secretary of the Treasury, was basically scrambling, saying, hey, we have to raise it now, or else there won't be enough money to cover expenses, there won't be enough cash flow in the US, and then there will have to be a government shutdown. This clearly shows that the United States, the economy is running on debt. The cash flow circulating in the economy comes from debt. So the fact that the US has sky-high debt, or that the debt clock keeps ticking up every second, this isn't really a problem for them. The real problem for the US will only arise when this debt stops moving. That's a real problem.